Well, it was a quiet day on Wall Street with the S&P 500 finishing flat on the session, especially in light of the news that President Trump and Kim Jong-un of North Korea did come to some agreements. However, this might be just the calm before the storm. We do have the Fed meeting tomorrow. This afternoon, we have the judge coming out with his or her decision on AT&T and whether they're going to be able to buy Time Warner. So there are still some news stories that can affect price action here later in the week. For right now, it's all systems go. Most markets remain bullish. We're going to be focusing our trade application example today on that hot technology space. So let's go ahead and get started. Welcome to the Market Outlook video. I'm your host, Brandon Van Zee. It's June 12th, 2018. For those of you that are new, first of all, welcome aboard. We're thankful to have you here in our audience today. Remember, you can subscribe to our YouTube channel to learn when we post these videos going forward. You can also give us a thumbs up if you appreciate these videos right there on YouTube. You can comment if you so desire, and then also check out our description area on YouTube in order to get signed up for our email distribution list. Now, we're also heavy users of Twitter, so we'd encourage you to follow us there. My handle is @BrandonVanZ, all one word. Now, remember, David and I will always pin the most recent tweet that informs you of the Market Outlook video to the top of our Twitter timeline. And if you get value out of these videos, we would encourage you to click like and retweet if you want us to continue to do these videos going forward. We also have a presence on Facebook, so feel free to jot down that web address you see in front of us there, and you can join our group. All right, with that, let's go ahead and do some analysis on the markets here. As you can see, I do have the S&P 500 pulled up. Not a whole lot to report today, as mentioned in the intro. It was a flat day. Now, we were up officially on the day by 0.1%, so I guess it wasn't as flat as a board, but it was pretty close. This was only good for about 2 or 3 points to the upside. As you can see how that candle looks right here, not a lot of activity. The range today was particularly small. In fact, take a look at the range here. The range was only 3 points versus what's typically a much wider day. So not a whole lot to report from a trading range perspective here today. And of course, if things haven't changed that much from a trading perspective, then our posture remains the same as it has been in recent weeks. Remember, we've been bullish on the markets going all the way back here to this candle. This would have been May 4th. That was the candle where we got our bullish posture. Now, it's easy for me to spot that with my eye because, of course, the background color of the chart turns green whenever we do get that bullish posture using this particular setup. For those of you that are following along at home and are already premium subscribers to our website, I'm using chart 4A in this particular setup here. And again, that helps us identify whether we have a bullish or bearish posture. We've been bullish for quite some time, so no change there from that perspective. One thing I will report is that we do have what's known as a bullish intermediate confirmation signal. You'll notice that we have the green line that's in a bullish territory right now, combined with the red line in the lower reversal zone at the same time. Now, as most of you are aware, while the blue line is not technically part of that bullish intermediate confirmation signal, David and I have noticed that typically if those signals are to work, they usually work better if that blue line is between 50 and 20. That is not the case right now. So generally speaking, when we're looking at those bullish intermediate confirmation signals, we're looking for a buy the dips mentality. Well, there hasn't been much of a dip. Yeah, we dipped a little bit from yesterday's intraday high, but that is a very small pullback right there. So I guess a long story short is this is not the ideal setup to go hog wild to the upside. We've already had a tremendous run. As I mentioned the last time I did the video, I don't mind any sort of a pullback here in the near term. Every market rally needs one. What I'm more concerned about is where will we bounce. If we bounce above that rising 30-day moving average, then I think we continue to go forward in the summer with a bullish expectation. Now, of course, news can change all of this in a heartbeat. We've got some earnings announcements coming up here at the start of July, which is right around the corner. Of course, I mentioned the AT&T Time Warner news as individual stock-specific news that could be coming out to affect some of the media space here in the next 24 hours as well. Let's go ahead and take a look at our 4 grid now. This will be chart 4B here. And this is basically the same setup we were just looking at a moment ago. However, this setup is going to include the 3 other U.S. indices in it. Now, we did get a question on how do you look at just one of those within the grid itself. You can just right click on any one of those smaller charts and then go to maximize sell. I just did that here with the Dow Jones. And then if you wanted to save it that way, you can always come up to your grids and just save your grid with a 1 grid instead of a 4 grid if you're somebody that does that and has access to our various scripts for these. Anyway, when we come back over here to the 4 grid setup, I will acknowledge that we not only have the bullish intermediate confirmation signal on the S&P 500, we also have it on the Dow Jones Industrial Average. So you'll notice over here, same type of a setup. Now remember, the Dow Jones had that brief period right there where it had a little bit of a bearish posture, not long, but it does look a little different than what we saw over here with the S&P 500, where we have been bullish straight through. So the Dow has kind of rebounded a little bit along the way, but again, we got a little bit of a pullback here. We were actually down 6 points on the Dow here today when it was all said and done. And so we do have that red line in the lower reversal zone combined with that green line with a bullish posture, and therefore that is another one of those bullish intermediate confirmation signals. This blue line is maybe in a slightly better place than what we saw in the S&P 500, but it's still not in that ideal territory between 50 and 20. As we look at the other markets here, you'll notice that the S&P 5, I'm sorry, the NASDAQ was up 0.3%. So of our 4 major indices, the NASDAQ was the strongest here today. And as I mentioned before, our trade application example will come from the technology space. Of course, the NASDAQ known for being very tech heavy. So that continues to be one of our leadership areas of the market. The other one is the Russell 2000. Small caps have been doing very well for quite some time. Remember, they were actually breaking to new all-time highs here at the beginning of May and have continued to follow through with strength ever since then. So those particular areas are not showing bullish intermediate confirmation signals at this point, but they continue to hit new intraday and intra-year highs in many cases. You'll see that the last time we hit a high here on the Russell 2000 was 4 sessions ago, and we're within spitting distance of that right now. Let's take a look at our 3 green arrows setup here. This is chart 4C, and here the background colors are a little bit different as far as their meaning goes. When you see the green background color on this particular chart setup for 4C, it just means that we have 3 green arrows. It's an easy way for your eye to identify that, and 3 green arrows in this case, what that is signifying to us is strength in a trend trading philosophy, meaning that we have price above a 30-day moving average. In this case, we have the MACD above the 0 line, and we have that stochastics bouncing as well, all at the same time, and that's what sets up your 3 green arrows. For those of you that want to practice buying stocks on 3 green arrows, of course, I teach my sector-based trend trading class every Monday, and been having a great time with that here recently. Some excellent stocks coming our way. But anyway, we do have 3 green arrows across the board, whether you're looking at the Dow, the S&P 500, the NASDAQ, or the Russell 2000. As we take a look now at our longer term view, remember this 1040 crossover method here now, this is chart 4D, is going to take a look at a much longer period of time. Each one of these charts represent 3 years in length. And so every one of the candles represents 1 week in length in this chart as opposed to 1 day. So it just gives us a much longer time period to get a sense of what's going on. Now, this is not the most sensitive approach to trading. We generally review this as more of a process for those of you that have 401k money that just wants to stay on the right side of the market from a general perspective, fully understanding that you'll never get out at the exact top and you'll never get in at the exact bottom, but you want to enjoy the trends in between. And this has been a really good environment to practice that philosophy. And remember, there will be other environments where you have choppiness across the board, and that philosophy, like any other, can have hiccups. It can produce losses. But fortunately, for those of you that are practicing it here over the last couple of years, you should have seen resounding success. You should have seen lots of bullishness in your charts, because the last time we got any signal, which what we're looking for in this case is for the orange line to cross up and through the blue line. And you can see that happened for the Dow Jones back here in March of 2016. And that was approximately the time period of all the other charts as well. So basically, here we are more than 2 years later, continue to be bullish to the upside. What we're looking for those of you that are wondering when will we go bearish, well, at that point, what we're looking for is the orange line to cross down and through the blue line, and none of them are in jeopardy of doing that right now. So this has been a robust, resilient market, however you want to phrase that, to the upside. It may not feel like the really exciting 2017 bullish market environment, but it's been consistent, and it's been hard to complain if you're bullish on the markets, which most of you are, because most Americans have their money on the long side of the market as opposed to on the short side. So this has been a successful era for the stock market without a doubt. Let's take a look here now at some 12 grid analysis. All right, so for this, what we're looking at as far as the background colors are concerned is if you see the background color being green, it means that we have a bullish posture using the intermediate term line on the market forecast indicator. If you see a pink background, it means that we have a bearish posture using that market forecast green line. So as we look at this first set of 12 grids, we are looking at the intermarket analysis. Now, that is set up by design to have a mix of bullish and bearishness because they're tracking things that aren't necessarily stocks. You're looking at everything from treasury yields to bonds to crude oil and other commodities, along with things like preferred stocks and master limited partnerships. So you kind of have a broad variety of different asset classes here. And so traditionally, what I'm looking for are just what are the strong trends and or reversals that we can spot on the charts. What I would say from a trending perspective right now with this set of 12 grids is that the master limited partnerships, which is our chart in the upper right-hand corner here, that appears to have one of the strongest trends on the board right now that is also considered to have a bullish posture. Again, you can see that if you were to look at AMLP, which is the ticker symbol that tracks the master limited partnership space from a fund perspective, it does have a bullish posture right now. The intermediate term line is at 91.17. Now this says it's falling, but remember anything above 80, whether it's falling, rising, or going sideways, we consider bullish. So it's up there at 91. That's the sign of a very strong trend right now. The downside of that is sometimes trends can get too strong. And what you're seeing right now is we do have one of those overbought cluster signals. Now remember, you got to be careful because like any technical indicator, nothing works 100% of the time. So we don't make an assumption automatically that this is going to start faltering here, but we just set the chances of that occurring at higher than normal. You will notice that we have had one other instance of a cluster signal here, but it was what we'd call an oversold cluster signal that occurred back here on March 23rd. Had you been somebody that with a thought process of a reversion to the mean, you'd have done very well with that trade. You can see we rallied almost immediately afterwards. So then the question is, now that we've got this overbought signal here as of today's close, will we have a reversion to the mean back down to the downside? Kind of like the general market, I don't mind a reversion to the mean. If it stays around that 30-day moving average, catches some support, and then bounces back higher, that doesn't have to necessarily jeopardize the longer trend that's in place. So right now, master limited partnerships still seem like a reasonable place to be looking. Of course, keep in mind, I'm not your tax advisor, and master limited partnerships are very unique instruments and do not belong in all account types, and for some of you, it might not be helpful at all. So be careful there as well. Let's take a look at some other 12 grids here. Oh, by the way, some of you like to look at that VIX on a daily basis, which is understandable. VIX didn't do much today. Remember, if the stock market's flat, you can pretty much assume the VIX will be flat as well. VIX was up 2 pennies today, so nothing to report there whatsoever. One thing I should point out, with the commodities down below, a lot of us have been keeping our eye on crude oil especially. Crude oil did put in this oversold cluster signal. We have had a little bit of a reversion to the mean back towards that moving average, but it hasn't been as robust of a trend as we saw earlier in this 3-month cycle here. We have started to get some other oversold cluster signals in the commodities area, I should say. Notice that the ag commodities did produce an oversold cluster here, so we might start looking for a potential bounce out of those as well. But let's go take a look at another 12 grid. This time let's look at the foreign markets 12 grid. All right. So as we look at this, again, same type of a philosophy where you're looking for green for bullishness, pink backgrounds for bearishness. And as we look at this, again, looking for trends and or bounces. As we look for trends here, I would say that Canada looks pretty strong. Obviously, Canada's been a little bit more in the news here recently with some of the words being exchanged between Prime Minister Trudeau, if I could spit that out, and President Trump. Australia also has a reasonably strong chart here. Now, we're still below some of these areas of resistance from Australia about 3 months ago, so it doesn't look quite as strong with Canada, who's clearly up over the last 3 months, but the general direction is promising for Australia. You can also see that down below here, Israel remains fairly strong. Israel has been one of the leading areas from a foreign markets perspective here in the last several weeks, and it continues to remain fairly resilient to the upside right there. As far as bearish trends are concerned, there are a handful of them to be a little bit leery of. We've mentioned Brazil and Mexico nearly every session, and the reason for that is they just cannot seem to stabilize. They did finish up today, so maybe this is the start of something, but judging by how their bounces have occurred in the past, I wouldn't hold my breath too long. Now, at some point, there's going to be value that needs to be uncovered, but whether that's now or 3 months from now or next year, we don't know. We kind of wait and react to how traders establish prices. What we do know is that every time that a stock like EWZ, or the ETF in this case, has attempted a bounce in the last 3 months, every single time it's failed. So with us being up 1% today, that's a start, but the assumption should be a failure of that bounce until we see otherwise. So be careful on those ones. I know the temptation is often there. South Africa is another one where we have really ugly price action here. I mean, this is basically the textbook example of a downtrend. If I were to right-click on that, go to maximize sell, as most of you are aware, the idea of a trend, in this case a downtrend, is lower highs and lower lows. I mean, this is about as perfect as you can find from that perspective. You have a high, a lower high, a lower high, and a lower high still. You have a low, a lower low, a lower low, a lower low, and yet another lower low. Now, you will notice that we have an oversold cluster signal here on South Africa. This is ticker symbol EZA. And so we might be due for a little bit of a bounce. I mean, we got one of those over here at the bottom of that downward trending diagonal channel. We got a nice reversion to the mean. So we might be due for a couple of days to the upside there, but until we cross up and through where we were trading back here on June 4th, I'm not sure I would trust a true reversal here. So be careful with EZA. And if you're looking for bearish trade setups, maybe an idea would be wait for a reversion to the mean bounce. If it looks like it's going to fail right around that 30-day moving average again, maybe that's when you strike while the iron's hot and put on a bearish trade on EZA. All right, let's take a quick look here at what's going on from a sector perspective in the United States. And so you can see right here that most of the sectors in the United States are bullish at the current time, judging by the intermediate term posture. The only exception to that is the utilities. Now, strangely enough, the utilities, while being the only bearish intermediate term posture, actually had a good day today. Now remember, one day does not make a trend, but it is at least, again, kind of a start. You can see over here, utilities were the biggest performer today, up 0.39%. Healthcare stocks were the worst performers today, down 0.22%. If we wanted to take a look at some of the bigger movers within those areas, let's maybe take a peek at some of the utility stocks out there. And let's see, we had energy that was up 1.81%. That's ticker symbol NRG. We had National Grid up 0.94. We had PPL up 0.86, DTE up 0.83, and Exelon up 0.80. From the healthcare perspective, let's see which stocks were stumbling to lead that sector lower. And from a healthcare perspective, the worst performers here today, Tenet Healthcare down over 2%, Prestige Brands down over 2%, Anthem down nearly 2% as well. So a lot of those health insurers, it looks like, bunched up in there. Anthem, Aetna, United Healthcare, they struggled here a bit today. Even Cigna, you can see, is down nearly 1%. So as we look at some of those chart setups here, again, looking for those various setups here, I'm just kind of glancing over towards CNBC because I'm noticing that a headline that says the judge approves the AT&T Time Warner deal, but I do also see that Time Warner and AT&T are kind of trading a little sporadically after hours, so I don't know if it came with some strings attached or not. I'll have to do some analysis on that after I'm done recording here tonight. But anyway, just you heard it here first. At least I'm hearing it here first and reporting it to you. It looks like Judge does approve AT&T Time Warner deal. All right. Anyway, let's get back to the charts here at hand. And what I was looking for is trends. And one of the strongest trends recently has been discretionary space. Notice day after day after day after day, we have upside price action on consumer discretionary stocks. A lot of those retail stocks, very strong. In fact, we looked at a discount retailer as a possible trade setup in my Monday class yesterday for that sector-based trend trading that I mentioned before. So a lot of those stocks really surprising people to the upside right now. That seems to be where some of that hot money is flowing. Other trends that look reasonable, real estate. Some of those REITs are still kind of plodding along. You don't talk a lot about them, but they're doing damage. They're doing damage to the upside. They're doing their job. They're going to work. So keep your eye on XLRE. That seems to be holding up reasonably well. And then there's that technology space. We got a little bit of a bounce out of technology right there as well in the form of XLK. We do remain with a bullish posture on technology, which then does lead us to our trade application example for the day. So for this, I'm going to come back over here to just a regular chart 4A to take a look at the market forecast indicator setup, and then I'm going to pull up ticker symbol FB. No, not football, Facebook. And you can see that Facebook, despite being a very controversial name in recent months for obvious reasons, has actually been quite resilient from a stock perspective. When you talk about economic moats, the networking effect of a social networking company like Facebook is quite strong, meaning that the more people that are on your network, the more valuable it is to everybody else that would potentially want to be on the network. It does you very little good to sign up for your own social networking company if none of your friends or family are on there. So since Facebook is still the largest social networking company on planet Earth, it continues to see monetary benefits despite some of the black eye that it's received from the public recently. So right now, traders are willing to overlook some of those things with the expectation that profits will remain strong in time to come. So as you can see right here, Facebook has been in a bullish posture using that market forecast indicator going all the way back here to late April. So this is nothing new. What is new is that we did have a reasonable pullback in price over the last week and a half or so. We were up here at 195. We pulled all the way back here to the low price of 186.43 4 days later. So we shaved off almost $10 per share. We now have a little bit of a bounce. Now, a lot of times I like to see these bounces occur right around the upward trending 30-day moving average. And that's kind of what happened here. It didn't quite go down and touch it, but it at least was in the general vicinity of that. I think one of the dangers of a market like this that's been so hot is that very few stocks have had reasonable pullbacks. This one had a decent pullback, and we almost touched that 30-day moving average. So right now, I think it could make a little bit of sense to be viewing a bullish trade setup on it. In particular, what I was looking at was what we call a bull put spread. Now, this is also referred to as a credit spread, just from a general perspective. Remember, credit spreads can involve both bull put spreads and bear call spreads. So the credit spread itself does not tell you whether you're bullish or bearish. It's just a generic term that you're starting the trade with a credit in your favor. And so that's what we'll be doing here. The nice thing about how we set those up is they're generally higher probability trades. We're usually selling premium out of the money, and therefore, as long as the stock doesn't do anything really wild against us, we should have a reasonable chance of making money. So with Facebook, I'm going to come over here to the trade tab. We're going to take a look here, in this case, the weekly contracts. Now, I had a nice discussion about weekly contracts versus monthly contracts today in my options for long-term investors trading room that I conducted. Remember, that class is held noon Eastern time every Tuesday. For those of you that are premium subscribers to our website, the posting is the recording is posted, and so feel free to go back and check that out. But anyway, for this particular setup, I am going to focus on the weekly contracts. Remember, Facebook being such a big company, well-known company, you still have pretty good liquidity out there even with the weekly contracts. And so these are the ones that expire 31 days from right now. So let's look at these July contracts. And as we look at them, I want to focus my attention right here at the 187.5 strike. You'll notice that that particular strike is our 30 delta. Oftentimes that's where I'll start my process of looking for a strike to sell, and then oftentimes I'll be looking for the very next strike below it in price as the strike to buy. So for that, what I'll do is I'll right click on the 187.50, and I'm going to click on sell vertical. That loads up my trade down below, where you can see we've got the -1 at the 187.5 put, and we've got the +1 on the 185 put. And so we're selling the 187.50 to take in premium. We're buying the 185 as protection, just in case we're flat out wrong. Remember, that will occur when you're a trader. If you take enough trades, you're going to be flat out wrong plenty of times. So that's our built-in protection. Basically, if this stock were to turn around and stop bouncing the way that it is right now and start going lower for some reason, if it goes below 185, we're kind of covered from that perspective. We're still going to lose money on the trade, but we're not going to lose incremental amounts of money the further and further it goes below 185. So that's kind of like, in a way, it's almost like a stop of further losses beyond what you've already kind of identified from the defined risk perspective that you were aware of when you took the trade. So speaking of that, what we're going to receive in credit right now is 60 cents. So that's what I referred to before. This is known as a credit spread. So we're going to start this trade with 60 cents, or $60 for every contract that you do that comes into your pocket. Now, the way that you profit off of a trade like this is to have Facebook stay above your short strike price. In this case, 187.50. So a number of outcomes could occur. Facebook could go up, continue bouncing higher, and of course that would be a good thing for your trade. Facebook could go sideways. If it stays at 192, you're still fine, because that's still above 187.50. It could even go down $4 or $5, and it still doesn't threaten your trade, because you just need it to stay above 187.50. If it goes down more than $5 per share in the next 31 days, that's when your trade starts running into a little bit of a problem. So obviously you still only want to do this trade when you're reasonably bullish on the underlying security, like we are at this given moment in time. So in order to see how much return on risk we're going to receive for this, I'm going to get my calculator out here, and I'm just going to click on confirm and send once to get our data. Here you can see our max profit is going to be that $60 that we start the trade with. We divide that by 190. Which is our max loss potential if the thing closes way down below $185 in 31 days. But our return on the risk that we're taking is 31.5%. Usually we like to look for those 30% return on riskers. So this one just barely gets us up and through that threshold, and therefore I think it's a valuable educational trade to take here in our paper money account. So I'll go ahead and send that one off. And as a reminder, our break even on that would be basically 186.90. And the reason for that is we would take the 60 cents that we're expecting to receive in credit and subtract it from our sold strike of 187.50. So if you wanted to look at that on the chart, then 186.90 would be about, let's call it, it's kind of hard to get it right on there, but right around that level. So you'll notice that that level coincides exactly where it bounced here a couple days ago. So as long as that low stays protected here for the next month or so, this trade should hold up reasonably well. All right, with that, I want to thank you for joining me here today. Always fun to get together and analyze the stock market with you. Remember, if you get value out of these daily free videos, we would encourage you to click like and retweet on Twitter. Remember, you can find me at Brandon Van Zee, all one word. So with that, I will let you be on with your night. Best of success with your trades and your investments. David will be back with you tomorrow, and then I should be back with you on Thursday. So with that, have a great rest of the day. Take care. Bye-bye.